Friends, in today's video, we will discuss Motilal Oswal Small Cap Fund. The fund is still very young, yet it has already made its mark. This fund has been in existence for just 1 year and 9 months, and in this short period of time, it has reached the #1 position in its entire category. Now let's look at its performance. In the past year, this fund delivered returns of around 1%. That may sound small, but here's the real picture. The small cap fund category as a whole delivered negative returns of -6% in the same period. So compared to its peers, this fund outperformed by more than 5%. And that is a significant margin. The past year was not kind to stock markets. Exchanges saw repeated sharp declines, and as a result, almost every fund's performance was poor. Against this trend, the Motilal Oswal Small Cap Fund stood out. It did not deliver negative returns when nearly every other fund in its category did. While the small cap fund category went down by -6%, this fund gave a positive 1%. That tells you something about how well it has been managed. But the journey has not been without hurdles. Last year, Motilal Oswal Mutual Fund faced controversy related to Kalyan Jewellers. Allegations surfaced that fund managers had purchased Kalyan Jewellers shares by taking bribes. Later, this news turned out to be just a rumor, but even rumors can damage reputations. This controversy affected the strategy and performance of all Motilal Oswal funds, including the small cap fund. Their performance dipped sharply for a time. However, the fund recovered very quickly. It bounced back, regained its strength, and once again climbed to the #1 position in its category. And despite all these ups and downs, over the past 1 year, it has still managed to outperform its category by more than 5%. That kind of resilience is impressive. So how has it managed to do this? The answer lies in its investment strategy. The Motilal Oswal Small Cap Fund follows an aggressive investment approach. The hallmark of such an approach is a concentrated portfolio. This fund holds only about 50 stocks. Compare that with the category average of 88, and you see the difference. Fewer stocks mean more focus. And while 50 may sound like a small number, it is still enough to provide good diversification. So it would be wrong to say the fund is extremely risky or lacks diversification. 50 holdings are quite adequate. One of the reasons this fund is able to generate good returns is exactly this: its concentrated portfolio. The more you diversify, the more diluted your returns become. But with a sharper focus, the fund can benefit more from its chosen picks. There's another important layer to its strategy. The fund doesn't just invest in small cap stocks, it digs even deeper. While most funds in the small cap category invest in companies with an average market capitalization of around 10,000 crores, the Motilal Oswal Small Cap Fund invests in much smaller businesses. The companies in its portfolio have an average market capitalization of only about 3,000 crores. That means this fund is going after much smaller companies within the small cap universe. And as you know, the smaller the company, the greater the growth potential. With higher growth comes the possibility of higher returns, and this is exactly the opportunity that this fund is exploiting. Now let's talk about its AUM, or assets under management. The Motilal Oswal Small Cap Fund has an AUM of around 5,200 crores. For a small cap fund, this is quite a reasonable size. Why? Because if a small cap fund becomes too large, the fund manager is forced to invest in bigger companies. That dilutes the essence of small cap investing, and returns get watered down. On the other hand, a moderate AUM gives the fund manager more flexibility to deploy money strategically and chase opportunities in smaller, faster-growing companies. So in this case, the size of the fund is actually a strength. So, what does this mean for investors? If you are someone looking at short-term returns, this fund may not be the best fit. Small cap funds are inherently volatile. They can fall hard when markets are down. But for long-term investors, those who can stay invested for 5, 7, or even more years, this fund could be a very good choice. And how should you invest? The best way is through SIPs, systematic investment plans, so you build your position gradually. If you want to invest in lump sum, do it in a staggered manner. Do not put all your money in at once. That way, you protect yourself from volatility. The story of the Motilal Oswal Small Cap Fund shows us something important. It's not just about returns on paper. It's about resilience in the face of controversy. It's about a bold strategy that goes deeper into smaller companies, and it's about managing size and focus in a way that gives investors an edge. So the question I want to leave you with is this. Do you have the patience and confidence to invest in such a fund for the long term, knowing that it takes bigger risks to unlock bigger growth? Or would you rather stick with a safer, more diversified path? Think about it and share your views. Because at the end of the day, successful investing is not just about picking funds. It's about understanding their story, their strategy, and matching it with your own mindset and goals.